10, and it's going to potentially be a struggle. We'll see if the consensus is right. They're saying it doesn't matter, doesn't change things. Sometimes the consensus is wrong, though. That's two to watch in Toronto and in New York.
Let's head right down to the TSX now, and Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital. Diana, thanks for joining us.
Thanks,
We've got Research in Motion stock down more than 4% right now. Does the consensus matter here? Is enough being done at the top of Research in Motion?
I think that as evidenced by the way it's trading, not much of a range. Yes, 4% is a lot, but it was up about 2-3% earlier. I think traders and investors are going to want to wait and see. This is definitely the ultimate value stock at this point. And some of the concerns about RIM losing market share was not so much an operational problem, but missing the boat a little bit on a couple of technology cycles, and that cannot be turned around very quickly. So I also think that it's a wait-and-see situation. I don't discount the fact that, it's entirely possible that the stock may have a good upside over the long term, but no one knows how long. It could be 4 quarters, 8 quarters, more than that. And I think that there's nothing imminent to be missed by not buying here, and so that's why you're not seeing a better opening to the stock. The gentleman taking over was a technology officer at Siemens. He has good experience, but whether he's integrated into the theme that has been plaguing RIM as an insider, like Francis said, that remains to be seen. He does have a lot of things to change, and they won't happen very fast.
And also, Diana, as he said on the conference call, and I think this might be part of the weakness too, he's not going to split up the company. That is not his intention. They're going forward as a software service and hardware company. That's right. Maybe some of those people who had hoped for something a little bit more aggressive on that front are getting out this morning.
That's right.
Overall, we've had a pretty good start to the year. With the TSX up about 4%, the S&P up 4%, NASDAQ up 7%. Seeing some things from traders and the like over the weekend saying maybe a couple of percentage points more, and then we got to back off. Where do you stand?
I agree. We're looking for a little bit of consolidation, and I'll just want to point out a couple of things that are evidencing this. Short interest has really gone down. The stocks that have rallied this year have been the stocks that have not done so well last year. Financials, great to see the rally. We love to see financials taking the market up, but they've been heavily shorted and there's lots of covering. You see Bank America up, 27, 28%. Those are huge moves. Those are very risky moves. Yes, we like to see it when it's on the upside, but when the stock can move this much on the upside, it can also move that much on the downside as well. So it's just risk. And volumes, volumes are down a little bit over 3-month average. I think that it's a bit generational. I think people are sitting and watching. There's no new money, and cash flows have shown money going into bonds still, as opposed to equities. So,
and what did you think then, Diana, about Goldman Sachs' call this morning to short the U.S. bond market, at least 10-year government bonds? I
have not seen that report. I've heard about it plenty. Credits, a lot of brokerage houses are going on that call. The flip side of that is raising targets on the S&P. Credit Suisse, for example, last week went bullish on the U.S. S&P, saying that targeting 1,400 to year-end from 1,325. And the premise was, and I'm not sure if that's Goldman's premise, but the European situation, the market has depriced the scenario of disaster. The long-term repo credit operations, the LTRO as it's called from Europe, is the equivalent of a QE. They're liquefying and flooding the market with liquidity, watching for the next card to fall, which in my view is Greece. I think that Greece is Greece situation is imminent. This is why the market is holding on to liquidity as opposed to recirculating it into the system. You see deposits at the ECB continuing daily to increase as banks are hoarding the cash there as opposed to recapitalizing and recirculating it into the system. I think they're waiting for the fallout from Greece.
If you want to see that graphically, take a look at Italian money supply, which is dropping through the floor, interestingly. Just in terms of what you're doing over at Barometer Capital, you're a relative strength asset manager. Where is that strength showing up right now? But also, has that strength gotten maybe out of hand? There's been some REITs, for example, have been huge players here in Canada. Is that stretched a little bit?
Yeah, it's possible, but we don't operate that way. We watch it. We keep our stop losses close to where, to beneath where the stocks are, and we let our investments run. We do not set targets and then sell them as they reach highs. As relative strength, we like to be in sectors that are working. It's possible sometimes they're overvalued, but the overvaluations on things that have a reason to be where they are, they just continue going, and people just want the yield. You see people piling into bonds. You see corporations being valued based on how they increase their dividends. We want dividend growers. This is what the investor wants today. Given the volatility that we've had in the last few years, investors not only want to get paid a little bit, but at the very least not lose money. So relative strength is how we manage money. There are other ways, but this is the way it's worked for us.
All right, as long as it works, Diana.
Yeah.
Great to hear from you this morning. Thanks for joining us.
Thank you.
Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital, joining us from down at the TSX.
Coming up after the break, a full look at the markets, and Paul Bagnall, with all the research that we've acquired this morning, a lot of analysts talking about research in motion. He's going to provide you the context for all of that when we come back.